everyone. Welcome to SAC's China Capital in Global Markets panel. It's a real pleasure to have the opportunity to organize this panel, to host this panel together with Brad, who has been really one of the first ones to put together a China biotech, biotech index fund index, so ETF. So it's a great pleasure. And my name is Marietta Wu, and I'm Managing Director from Churn Capital. We are a life sciences focused fund investing mainly in innovative therapeutics. And today we have quite experienced panelists. Most of them are venture capitalists, and from China, some of them also operate cross-border in the US as well. Without further ado, I'll hand this over to my co-host, Brad.
Great. Well, thank you, Marietta. It's been a pleasure to work with you, and thank you for co-hosting as well. And thanks to our esteemed panel for being here. As Marietta mentioned, my name's Brad Loncar. I run a firm, Loncar Investments. I'm a biotech investor, and I've also created a NASDAQ-listed ETF that focuses on China biotech. And it's an area of just huge intrigue to me, and I'm very bullish on the future. And so it's great to get the opinions of the experts such as yourself. Why don't we start quickly by having each panelist introduce themselves. Maybe we'll start with Amy Tang from Qiming. Amy?
Yeah. Hello, everyone. It's my honor to be here. And Qiming actually is a top-tier VC firm in China. It was founded in 2006, and it has managed more than almost $6 billion assets. And among them, half of them are focused on healthcare sectors. We have invested about 120 biotech companies till now. We have a diversified investment, including drugs, IVD, medical device services, and digital health. Myself, I'm training by pharmacy and biology, and joined Qiming Venture by the end of 2015 as a venture partner. Yeah, that's my introduction.
Great, thank you. Michael Keyoung from CBC Group.
Yeah, thank you, Brad and Maria. Thanks for having me. My name is Michael Keyoung, Managing Director, Head of North America for CBC Group. CBC Group was started in 2016, focused only on healthcare. We invest in venture capital, private equity, now also in royalty credit. We manage over $4 billion today. We launched our inaugural royalty credit fund last year, 300 million in size. And also we kicked off our 5th fund investing this year as well. Half our investments in therapeutic, the other half is diagnostics and services and med tech. We focus mostly on Asia, especially in China. I think we have one of the larger healthcare funds dedicated there. We have 70 people in the fund, including investment and operating partners. And we have a background, physician scientist by training here in the US, trained in neurosurgery. Been doing healthcare investing in the private and public side for 12 years. Also was a CEO of a public company out in Asia. And I've been with CBC Group since 2017. So great to be here.
Excellent. Sean Zhang from Lilly Asia Ventures.
Thank you, Brad and Marietta, for having me. It's an honor to be here. And first, a little quick intro about our fund. Lilly Asia Venture started in 2008 as a corporate venture of Eli Lilly and Company, and as one of the earliest biotech focused funds in China. We were fortunate to grow with the biotech industry in China, and became independent from Lilly in 2011, and expanded our geographic footprint and now invest globally. We currently manage around 160 portfolio companies and around $5 billion committed capital. We invested globally and took a stage agnostic and therapeutic area agnostic approach. For me, myself, I joined the Lilly Asia Venture in 2018 and currently a VP based on Menlo Park office. I have a background in management consulting as well as some biotech experience in San Diego, US. Very nice to meet you all.
Excellent. And Xavier Z from Union Healthcare Ventures.
Yeah, thanks, Brad. It's a great pleasure to have me online. And Union Health Ventures is backed by the leading Chinese farmers like Henry Medicine and Yunnan Baiyao. And we specialize in healthcare investment. And we focus on innovative therapeutics and also advanced medtech. We invest globally in the full life cycle of therapeutic development, from very early stage to very late stage. And personally, I'm also responsible for the incubation program of the fund. And prior to joining Union, I was the founder of TVM Capital China. And I myself was training as a scientist with a life science and physical science background. Thank you.
Great. And also Simone Song from ORI Capital.
Hi, this is Simone. Yeah, I am the senior partner at ORI Capital. ORI Capital is a VC, healthcare VC fund investing globally to support innovative companies around the world. Our mission is to combat large diseases, use 3 modalities, therapeutics, drug delivery, and diagnostics. So one of our main focus is clearly oncology.
Wonderful. So since this is together, with the annual big oncology conference in Chicago, so I think for the first question, given I'd like to ask our panelists, given the current state of oncology market in China and globally, what type of investments are you looking for in the oncology space and beyond? Perhaps we can start with Zhang first.
Thanks, Marietta. From the landscape-wise, I think when we are talking about the China market and globally, I think if we specifically zoom in a little bit to China, the field has moving from me too to be best in class and innovative drugs. And it used to be when we are seeing a lot of company licensing in great assets from the US and building cross-border companies. And right now, we are increasingly seeing innovative companies in China licensing out assets to big pharma. So then our current interest, in China and globally is really in best-in-class innovative drugs. And we took a modality agnostic approach and really looking at a differentiated product. And like for those modalities, such as small molecules, we're interested in more like, some big areas like have a precision oncology and biomarker guided space. For example, some interesting areas such as synthetic lethality, PROTAC, and some specific pathways like very relevant to the unmet need in China, such as KRAS inhibitors and also EGFR inhibitors. So those are some of the small molecule side. And then for biologic side, in addition to the traditional antibody, and we know there's tens of PD-1 in China, but there's also, we have portfolio companies working on this space and have been very successful, such as Innovent. But also we are looking for the next generation, like bispecific antibodies, when we're thinking about immuno-oncology, and we're looking at the emerging ADC space, where there's a lot of excitement. And also kind of bispecific or T-cell engager approach, which also has a lot of interest in both heme indications and also solid tumor indications. And lastly, the new modalities is also very exciting, like oncolytic virus, like cell therapy, and for example, radiopharmaceuticals. So then I think those are the general area that we have been paying a lot of attention to. And in addition to those modalities, I think there's other areas like such as some very interesting business models. We see emerging trends. I think a lot of the panelists on this panel have experience in doing cross-border deals. Like for example, take the traditional licensing model, Or take right now, there's a lot of new building of a JV that across the border. Although we see you know, kind of like there's some U.S. and China tensions recently, but then for drugs, there's no border. You know, for one drug that works in U.S., they can definitely work in the patient with unmet need in China. So sorry, that's kind of my overall view in this.
Thank you. And Amy, I know Qiming has, especially in China, has a big effort there. And you guys also are invested in some of the cell gene therapy companies. You have any inputs or insights that you could share with our panel?
Yeah, of course, the oncology area is the biggest disease area for drugs and for diagnosis. Actually, Qiming's investment strategy in this area is very similar to Lilly venture, just like Zhang said. And besides all the traditional companies such as small molecule and biological companies, we also invested lots of new modalities, including diagnosis and therapy. We from the diagnosis aspect, we invested such as berry oncology. It covers from companion diagnostic response monitoring and prognosis prediction. From these areas, we try to get the patients get early detection and have the better treatment efficacy. Besides that, we also invested the cell therapy, gene therapy, and other new modalities such as TTF, like the Zai Labs product. Yeah, so we can see a lot of new in this area, and we are also very exciting to study them and evaluate and invest. Yeah.
Thank you. And Simone, given your fund's focus on oncology, anything you'd like to add to what Zhang and Amy already shared with us?
Yeah, we are a little different. Zhang said that it is modality agnostic. We are actually quite modality specific. We focus heavily on immuno-oncology. So we only deploy capital into the scientific approaches within immuno-oncology that we feel very comfortable with. For example, oncolytic virus. And also we are incubating companies in the CAR-T space to specifically solve the challenge of treating solid tumor. And we, of course, we're very interested in looking at biospecific T-cells engager and also NK cell engagers. And also we are opportunistically looking at the CAR-NK space. So these are our strong focus in immuno-oncology. These are the runways or approaches we're quite comfortable with. And of course, having said that, we focus on immuno-oncology, we'll also start looking at the protein degradation area to treat cancer. Thank you.
Thank you. Michael, given your focus more being on the US side with a China-based cross-border fund, anything you'd like to add here?
Yeah, so I think, Zhang covered it in terms of all the exciting areas. So I'm not going to add in terms of which type of assets we look for. But as you know, we're probably best known for studying new companies where we incubate and bringing, some of the de-risk asset from the US to the greater Asia market. Obviously, Trovaldi from Immunomedics is a nice example where we're willing to pay for a great asset that's still not de-risked. And we're opportunistic in terms of those type of transactions. So we do look for opportunities here in the US as well as Europe that we could bring to the Asian market that could bring the drugs to patients quicker. Of course, we love, starting innovation early from discovery, development, but sometimes we try to help accelerate that bridge If there's innovation that's already accessible, data is showing that it clearly works, we'd love to bring it to the market quicker. So that's some of the things we've been doing in terms of how we incubate companies. But that being said, I think IMAB is an example of where internal discovery work has happened. That's really bearing the fruit. Although IMAB was started with a JV as well as in licensing, but obviously over the last 4 or 5 years, the discovery has really worked. Obviously consummating the partnership with AbbVie for their CD47, which we believe is going to be best in class. So I think those type of opportunities are what we like today. And I do agree with other panelists saying innovation is happening in China. So we are supportive of that. But if we could find other assets that we could bring to China earlier, we'll also continue to look at that opportunity. So we're agnostic in terms of platforms, agnostic in terms of disease. It's just about unmet medical need that get to the patients and help the patients. And of course, oncology is a big focus. With that, we did start a new ADC-focused company, learning from our Trodelvy Immunomedics experience in-house ourselves from our new fund, and trying to really meet the ADC market with the right targeting. So we're trying to do a little bit more incubation on R&D, but we're still opportunistic about finding assets here in the US and Europe.
Sure, absolutely. I think this is one of the strategy for quite a number of life sciences focused fund, and certainly the in-licensing arena is getting much more competitive as well.
Everyone's doing it now. Of course, you started.
I know. I still remember back when we were starting with Zilab, there's really not a whole lot of people doing that, but these days the prices are up and it's getting more and more competitive, and not only in oncology, certainly in other therapeutic areas as well.
Well, kudos. Can I give kudos to you, Marietta, and everything Zilab has done? So congratulations. Build a great business. It's wonderful.
Thank you. Well, the tables turn now. I'm on the back on the investment side.
Build the next Zilab.
You know, that word competition is coming up, and I'd like to ask a follow-on question about what you're all discussing. You know, Sean, you mentioned, PD-1s and some of the newer modalities. I remember just a few years ago, we talked about a couple PD-1s in China. There's already a handful on the market, and now there's dozens in development. It became fiercely competitive very quickly. And some of those modalities that you mentioned, like bispecifics, it feels like they're starting to also get fiercely competitive. You know, when I talk to Chinese companies today, I've talked to dozens that have said they have a differentiated, bispecific platform. And so I'm wondering, as venture investors, how, with the environment changing so quickly, where do you see the market trends headed in the future? And how do you keep up with that, especially being, earlier stage venture investments as you are? Maybe I'll ask that of Xavier.
Yeah, thank you, Bob. So in China, actually, my opinion is the whole life cycle of therapeutics is shortened. And the period actually is sequenced from two ends. One is a very fierce competitive landscape, as you mentioned. On the other hand, it is on the commercialization process, the government outsourcing and bidding process. So essentially, when you do the calculation of the valuation, you may find the dramatic difference between the US side and China side. And this also actually accelerates the innovation process. So as you mentioned, the monoclonal antibodies is severely overcrowded. And however, for a bispecific antibody, even though it is very crowded, and comparing to US, the Chinese counterpart is in pace or even advanced, because the period in the US is still focused on the PD-1, PD-L1, the monoclonal antibody. So I think the chances that for the cross-border fund or the fund have both operation in US and China, we could fully take advantage of the acceleration landscape in China, and to save the cost and also the time. So this is why in reality, Actually, almost every fund in the room actually are doing licensing.
I see.
Yeah, this is a microspec I want to share.
Yeah. Amy, how about you? How do you plan years in advance when you're seeding early stage companies?
Actually, I agree with Michael. In China, it's when you find a validate target, there are lots of companies will come to this area, and this area will become very, very crowded very soon. So for us, I think we look very few traditional drug companies nowadays already, except we can see the very exciting data, human data. Except that we will focus our energy on some new modalities, just like I said before. Which are very less competitive, and we also move our investment stage into more earlier stages, and we such as we funded such as mRNA. Small biotech companies, they are still in very early stage, but their data seems very exciting, and we think they have a potential to grow into a bigger one. And we also invested ADC company. Actually, ADC is also very crowded already now, but this company has some unique technology. So we think they have a very strong team. So I think currently we will more focus on good assets, good technology, and good team. Good team, I think, in China is more important than technology, because we can't find many really innovative technology in China.
Yeah.
So team is more important, I think.
I think that's a great point. Okay, so we've talked about ADCs, we've talked about bispecifics. Simone, you mentioned that you also invest in cell therapies. We've heard a lot about how there are more clinical trials of cell therapies happening in China today than the United States. It seems like China really wants to be a leader in those. I know that we have a couple of approvals that are pending right now. I'm wondering if you have any thoughts on the commercial prospects for cell therapy in China, and also just the long-term trend. Is China going to be, is a Chinese company going to be the first one to crack the solid tumor code? How do you feel about the cell therapy market in China?
I deploy capital globally. So we are a very, very science-driven fund. So I can't see who is going to crack the, cracking solid tumor. It's not easy for CAR T because, there are, you obviously cannot use CD19/20 as target. So obviously you have to find new target for solid tumor to treat solid tumor, but most of the antigens are not tumor specific. They are all tumor associated. So the toxicity issue is always a challenge. So for me, when I look at CAR T companies across the board, whether it's in China or or globally, the first concern is, what target use? Can you address the affinity issue? Can you address the TME issue, etc.? So whoever can solve these problems will be, could be our target. And I see companies in China, in US, trying to crack this tough nut. It's not easy. I don't know who will be the first. So when I hear my colleagues, my fellow panelists are talking about assets being spaces being crowded, access being expensive in China, we actually run into the same problem globally. And from a different angle, I don't think, for example, for new modalities such as a BiTE or NK linker, NK engager, or CAR-T for solid tumor, we don't see a lot of assets, but we face the same valuation issue here. And in China, it's like you see a lot of assets, therefore prices being bid up. In the global market, you don't see a lot of assets, but they are also becoming very expensive. Why? Because there is a lot of money. There are a lot of not VC funds. There are a lot of hedge funds moving into our space, investing earlier and earlier and earlier. You see all kinds of preclinical companies going public. You see three or four CRISPR companies trading with no solid data yet, but trading at the multi-billion-dollar, price range, in that price range. You see CAR-T companies that try to, the platform focuses on in vivo expansion of CAR-T cells. And then it's also trading at multi-billion dollars. So we have a different kind of challenge, maybe a bigger challenge, not enough assets, but assets are being very expensive. So how do we tackle that? I think the only weapon is to be scientific savvy, to drill down into science, to understand the challenge of the space, what the unmet need is, see who can solve that problems, regardless of what the price tag is, unless a company can address some of the issues. Otherwise, it's irrelevant to us.
Okay, well, this is a great panel. We're getting a lot of great insights, especially about some of the difficulties of deploying capital. You're talking about valuations. Amy mentioned, finding the right management teams. Michael, I'm wondering, are there any other challenges that you and your firm are running into in terms of deploying capital, either in China or the US or anywhere globally?
No, I think the biggest challenge always is the people team. I think we talked about it as well. We certainly have gone through a process where we identified a team we thought they were the best team for that particular function, but maybe it doesn't end up being that strength for that person, especially when you take him from a bigger organization to a small entrepreneurship biotech where you have to do everything yourself. You don't have an army of people helping you. So I think that's some of the challenges we have in people identification, but it is definitely driven by people. Where biotechs will have 9 lives, where science definitely doesn't always work out the way you expect. Just experiments don't always translate well either, from so animals to patients. So I think that's been the biggest challenge. And as we operate in China as well as here in the US, and we have the presence in Europe as well, I think that's been the biggest challenge. And also I think we definitely gone through the heyday of biotech where a lot of funds as well as companies have done well, a lot of capital around the table, especially in this panel as well as others. So I think there are a lot of money chasing deals. So certainly it's good for innovation. I think innovation will get the right price and people will support it. So I think we're definitely in a great time today where next 5 years is going to be a wonderful time. A lot of capital supporting innovation coming out of China. And obviously we'll continue to support here in the US. Great.
Sean, I'm wondering if you've seen any challenges, and nobody has mentioned the elephant in the room, COVID. That's interrupted a lot of cross-border business. Has that impacted your job as an investor in life sciences globally at all either?
I completely agree with Michael and Simone regarding kind of a competition and regarding talents. And then Brad, you mentioned the COVID. Definitely the paradigm shift. So we used to fly a lot to the East Coast, fly into China and meet companies. And right now everything's happening on Zoom. And because the field is flowing with money, so then deals are getting super competitive. That it used to be, we have been very scientific driven, have time to do a deal and do deep due diligence for 3 or 4 months before starting a term sheet. And right now, when we see a deal, a lot of times it's like, oh, we already identified the lead, and you have 2 weeks to decide if you want to join in or not. So definitely the field is very hard. I don't see COVID being impacted because even for labs, our portfolio companies, even during the heat of COVID, they're still operational. And also thanks to science, we have some wonderful vaccines that are developing on unprecedented speed. that, I believe a lot of panelists already have fully vaccinated. So hopefully by this summer, we'll be able to meet in person again. So yeah, that's my take.
Well, Zhang, since your LV also invests globally, I'm just wondering, where do you see synergies when you invest alongside with other global firms or investors? I think same question, similar, apply to Simone as well.
Yeah, we do a lot of collaboration with a lot of leading US funds. Investing in the US, but right now we also see a trend that US investors are interested in China, and then we recently have some interesting deals that have a lot of collaborations. So I think the thesis is the same. It's really about science and about wonderful teams. So then, about scientific insights to really bring therapeutics to really unmet need. So, and then from a unique angle, because our team has been in China for quite some time, like a lot of panelists here, that we know the market in China. We have, we have the network of meeting the talents, and we have, our venture partners have a clinical, specialist or regulatory specialist, and also we have the network to access the commercial organizations to help think about the overall strategy. So then bring that China angle, and it tends to be thought partner about China, especially China becoming the second largest market. So I think that's our angle.
Thank you. Simone, any experience you'd like to share with us?
I think, we invest in very, very early stage companies. So it's always good to have validation from the investing community. So what we did was that we benchmarked 1,000 healthcare managers, fund managers, and of that, we have further benchmarked 200 fund managers. Among that, we benchmarked 20 healthcare fund managers who have the similar style and who have beliefs in modalities, in approaches that we believe in. So we always reach out to them. They also reach out to us. For example, we would invest with NPM and F Prime. So it's good that we have the desire, and they all have the desire to work together. I think, as I said, investing in early stage company is always good to have validation from each other.
Absolutely. And, at least from our fund's perspective, we also observe the line between a strict China biotech and a global biotech starting to really blur, as both Zhang and Simone alluded to. More and more global companies, they're getting interest from local investors and with potential operations coming to China. Similarly, a lot of the Chinese company getting tractions globally as they look for listing overseas. I personally also have companies with a global major crossover fund coming in as well to support the company for their global ambitions. So I think the space is definitely very dynamic in that regards. Switching gear, Michael, actually from you previously actually worked on some of the joint ventures, I believe, and also from your fund's perspective, you also had a number of joint ventures like the Overland and all that. So I'm wondering if you could share with us any of the advice, lessons learned, or best practices through those cross-border collaboration, because it is becoming an important aspect for investments related to China, and especially in the oncology space.
Yeah. So I think joint ventures are good and bad. I think there's a lot of if you look back 10 years ago, I think there was a time period where JV was the only way to partner with US companies, and then for some time it was only in licensing, and everybody didn't want to do joint venture, and now it's back to joint venture being the mode of operation. I just saw a ticker of WeChat on the joint venture that was created by another fund. So I think it depends. I think it depends on the two partners, what they want to accomplish. If it's multi-asset partnership where there's going to be a lot of reliance on the innovator to the other partner, then I think joint venture makes a lot of sense. But I think biggest learning lessons always has been being transparent from the get-go in terms of what the expectation is going to be, especially as you go through China in terms of what the clinical development is going to be and the regulatory hurdles. They don't always understand some of the preclinical docs dossier that's required, as well as the nuances. Sometimes they think you just go straight to China without doing clinical trials. And one of our portfolio company had to get a divorce from that partnership because the US company just didn't believe that's the case. So I think setting expectation from the get-go is important. And I think you should do a joint venture if you think it's multi-asset, there's a lot of synergy be created, and you need that alliance to build. And you're going to continue to rely on that science expertise. I would say joint venture makes sense. But it's difficult to do, I think, if the culturally as a company, they don't fit. And there was discussion, I think, Simone, about culture with the funds, but also with the companies. I think you have to have the same mind. And, you know, if one group doesn't a little bit more aloof, they don't talk about issues, then you're going to have a lot of problems. You want a partner who's going to be able to transparently communicate often about some of the problems and some of the concerns they have, so you could solve the problem 1 year before it happens. Because in drug development, you can't delay a year and find out the problem that far down the road. So definitely joint venture is a great way to do it. We've been very successful. IMAT was one of the examples where we started with a joint venture that became what it is today. And we're super excited that has worked out well. And we created a few other joint ventures last year as well as this year. But definitely going with a full understanding of who they're going to be is a long-term marriage. All the licensing, I think, is just like a dating. It's not marriage. But joint venture is a long-term partnership. So know your partner before you get married.
Sure. Thanks for sharing your experience, the good and bad. Xavier, with the focus backing from Henry and other local farmers, where does your cross-border collaboration strategy sits?
Yeah, actually, we're quite independent GPs, and we only leverage Henry's and also Yunnan Bio's resource. So one type of model we're doing is we actually do some spin-off of the asset, use it as a infrastructure, and then licensing or forming JV under the technology platform. So I think the key is how to integrate different elements of the interest parties. For Henry and Yunnan Baiyao, the strength is still on the commercialization part. So we use it as a commercialization partner, and then we build the JVs or licensing new vehicles in China. And from the dual sourcing perspective, we also realize that for very early stage assets, the data is not fully validated. So we can use some wet lab resource in China to validate. This is additional point.
All right, so I'm going to shift gears a little bit. So this is the capital markets panel. And one question we've always asked over the last couple of years is kind of the NASDAQ versus Hong Kong question. So I want to ask that again. But this year, it seems we have a third option, Star Market, which seems to have had a lot of activity. And so there's lots of options for China-based and China-focused companies to list and look for capital. Maybe I'll start by going back to Michael, because Michael, you've incubated and invested in companies that I know have definitely done Hong Kong and NASDAQ. So from your perspective in New York, what are the differences, and what might be the best listing venue for certain types of companies, do you think?
Yeah, so I think early on, people thought when the Hong Kong opportunity for Chapter 18A opened up, we thought they'd get a higher valuation in China or in Hong Kong. So that's why a lot of people have pivoted. But I think by all in all, that's not the case. It's more or less similar, partly because the investors that invest in both exchanges are same. US investors invest in Hong Kong and vice versa as well. So I think the valuation has come. And I think it comes down to the management team and the story of the pipeline. If you're a more China-centric story, and the management team likes being in Asia more. And I think Hong Kong IPO makes sense. And there was a concern about follow-ons. Can you do follow-ons in Hong Kong? But obviously, the companies have proven that it's feasible. So I think that's been the great part. But I think for pipeline, especially in oncology, that's global. And obviously, you could have a global partnership. You want that visibility to get the partnership. I would definitely say go to NASDAQ. And obviously, NASDAQ has always been proven to be able to do follow-ons. Maybe the IPO amount has always been a little bit smaller on average than Hong Kong. But obviously, you subsequently can raise a lot more capital. And even if you become a micro cap, you could always raise capital there. So I think it depends on the pipeline. And if you could sell the global story, then I would definitely encourage companies to go to NASDAQ. And we have a Delaware-based company that's run by a Chinese American that we incubated, and is seeking IPO in NASDAQ. And it makes sense because they're focused on global development. But if you're going to do pure Asia play, then I would say stay in Hong Kong.
Okay. Amy, what are your thoughts on this topic? Because I've seen Qiming also be quite active on the STAR market.
Yeah, because we have Qiming has both Chinese team and the US-based team. So our Chinese team are more focused on China market. So most of our portfolios are developed in China. Since the STAR market has a higher valuation, so it's very attractive to our portfolios and the investors. Before this year, I think most of our portfolios will seek to IPO in STAR in China. But since the beginning of this year, I think all of you have known that the security has raised the bar of some IPO in China. So lots of our portfolios have moved to Hong Kong this year, since this year. I think from the regulatory aspect, I think the Hong Kong market and the NASDAQ market are much more flexible in several aspects, such as a lock-in period and the secondary offering, etc. If I agree with Michael, if your pipeline want to develop and attract the capital from the global investors, then you need to go out of China, then IPO in Hong Kong and the NASDAQ. But I think the whole environment is very dynamic. So the portfolios managers and the investors and the traders will guide the companies from time to time. Yeah.
Sean, what are your thoughts on this? Recently in the news, the chairman of the Hong Kong Stock Exchange said in 5 to 10 years, it'll be the biggest stock exchange in the world for biotech. Do you share that view?
Yeah, I think we have a big vision that the China healthcare market is going to grow tremendously, given two factors. One is when you are thinking about US healthcare spends out of GDP is around 17%, and China is hanging around 6%, and Europe is around 12%. So we believe with that trend, the China healthcare will have a large growth, especially with the GDP and with the percentage of GDP. And secondly is regarding the aging population. As we all know, like a couple of days ago, China just published their recent census, and then we do see a huge trend in terms of aging population, and definitely there's more unmet need here. So we do see there's a huge growth potential in China healthcare market, and I think that's one. And then Hong Kong Exchange obviously as a gateway, although a lot of portfolio companies for us also went to NASDAQ, but Hong Kong is the gateway for innovative biotech companies in China to access global capital. So I agree there's going to be a huge potential for Hong Kong Stock Exchange.
Thank you, Zhang. We definitely see tremendous momentum in the local capital markets in Hong Kong as well as in China. And to that extent, I think Qiming probably also have a great insight too, since Lisa is on the board of the Hong Kong Stock Exchange and did a lot of work on the 18A filing as well. We are close to the end of our time. Thank you everyone for participating. I think we are living in very exciting times in the China life sciences space, and certainly oncology is a great area of focus and driven a lot of the growth in the new innovative biotechs in China as well as globally. And specifically in China, I think relates to oncology, we really start to see some of the newest therapeutic modality emerging with China catching up there rapidly. And I think this could potentially be a place of potential leapfrog for a local market. I hereby thank everyone for participating and look forward to working with you and collaborating, and hope we'll get to see face-to-face and be on the same panel physically next year.
Yes.
Thanks, everyone.
That would be
Okay.
great.
Thank you. Bye.
Thank you so much.
Yeah,
Great to
Thank
see
you
you.
very much.
See you,
Bye.
everyone.
Bye.
Bye-bye.